So the first thing we need to understand about different orders is actually what they are, what they mean, all that good stuff. So I'm going to pull up my little friend. The verbiage and stuff is the same pretty much between all of them, but here's a little order form. This is from eTrade Pro. If you're using it, if you're going to do a basic order, if you're going to do a stock order, say you wanted to buy, I don't know, AMD, and you wanted to get 1,000 shares at, let's see what the ask is right now, 302. Okay, you've got a couple ways you could put in this order. The first way is this term you got to think about. If I only put this order in for day, that means at 4 p.m. when the market closes, what's going to happen to my order? What's going to happen at 4 p.m. if the term is only day? Yeah, it's going to expire or cancel. If I do it this GTC, what does that mean? When you see GTC, good till canceled, that means the order will actually stay in until you cancel it. Really, really simple. The next thing is determining how I want to buy it, whether it's a limit order or a market order. A limit order, I set the price that I want my broker to buy it at. I'm telling my broker, like if I put this in at 305, I'm saying I want 1,000 shares and I don't want to pay more than $3.05. If I do a market order, you see this went gray here. I don't get to pick the price. And quite literally, I'm telling my broker, I want 1,000 shares at whatever price you give them to me at. Now, you assume that your broker will try to get you the best fill possible. But in reality, you've given your broker the permission to do whatever price fill they want for those 1,000 shares. Where that can come to bite you is sometimes in some of your lower price stocks and your OTC stocks, you'll get these wicked spikes or, miskeyed numbers. You'll see a 10-cent stock spike up to $1 real quick, usually because somebody put the decimal point in the wrong spot, or there was a market order and somebody's broker hosed them over. Now, what I typically use is limit orders. But whether it's a stock or an option or anything else, the thing to understand is that the only way stocks go up is if people buy them. So if other people want to try to bid sit for the best penny or whatever, I'm going to buy on top of them. And then while they're waiting to get filled, if that bid support they're giving me goes away, well, or starts to dwindle, I'm going to slam it right on them. I'm going to let them get their fill. And then wish they hadn't. So I typically will try to buy above the ask. On this one, you see the ask is 302. I say, well, I'm happy getting filled by 305. I give my broker permission to fill me at any price, 305 or below, and I would put my buy in. Now, if I was going to sell this, I do the same thing, but with the bid, if I had 1,000 shares and I wanted to sell, I'd look at the bid, it's at $3. I'd put mine in at like 295 and I would sell it. Real simple. On stocks above $3, nearly every broker will let you do a stop on quote or a stop limit order. If you do a stop on quote, you have to be 10 cents away from your current bid. So with a bid at $3, what is the highest price I can put in on my stop on quote? $2.90. And if I want that to put that in as a stop, I usually want to have it like good till canceled. Now, what a stop on quote order is, it is where, let's say the stock price goes down to $2.90 It will sell my shares with what type of order? A market order. If I do stop limit on quote, and I put the stop price in at 290, that means my stop will be triggered at 290. Then I get to put in a limit price. It says if the stock hits 290, you can sell my shares no lower than this. Well, I can tell you this much. If you put your limit price above your stop price, you're asking for trouble because your stop could hit. You could be sitting there forever at 302, never filling. So the way I would typically do this is I would put mine in at like 280. If I'm trading a common stock and I want to do a stop limit on quote, this is basically saying if my stop is hit, if the price of 290 is hit, that will trigger my stop out, and a limit order will be created allowing my broker to sell my shares for no less than 280. Typically, if there's a bid at 290 or 289, they'll sell it there for you. I give myself a little wiggle room, but I don't just want a market order because I don't want to come in and find out that my shares sold at 30 cents. That would be kind of a pain. The other type of stop order is a trailing stop. And you'll find most brokers with your trailing stops on common stock, they'll let you do a trailing stop dollar. And what a trailing stop is, let's say I'm buying this stock at $3 and I want to trade it with a 10-cent trailing stop. Well, if I buy it at $3 and I put in the 10-cent trailing stop, what is my stop going to be initially? If I buy it at $3 and I put in a 10-cent trailing stop, the second I enter that order, my stop will be what value? 290. The cool thing about a trailing stop is if the stock goes up to $4, where will my 10-cent trailing stop be at? 390. So it'll be 10 cents from that high price that was achieved while I was holding it. Now, the one thing about putting a trailing stop in too close or too tight, you buy at $3, you go to 310. Well, now your stop's at 3. It goes back to 3. It stops you out and then goes to $4. So on a common stock, for ones under $5, if you're going to use a trailing stop, use 10%. If you're going to do the actual dollar amount, do for whatever 10% is. So we're talking about a $3 stock. What's 10% of that? $0.30. If you're on a stock from $5 to $15, 8% would be okay. And on a stock above $15, 5% for a trailing stop is just fine, which is a really good idea most times for like long-term investments. It's not a bad idea at all. It protects your gains. And you can just put it in good till canceled and walk away. Now, the order for common stock is different than the order for options. If you're using this type of order form on E-Trade, you can click where it says options. And let's say I wanted to do an options trade just because we have the chart in the background on Citigroup. Right over here, I put in the number of contracts that I want to buy. Let's say I want to buy 5 contracts. I type 5 here. This contract type, leave it defaulted. And let's say I wanted to buy calls. And my expiration was March 20th. And I was going to play we'll go with the $50 calls, $50 strike. Just like the common stock order, limit order lets me pick what the highest I will pay for it is. So right now you see the bid's 118, the ask is 121. If I was sending this out on an alert, I'd probably just put it in at 125 and I would hit buy open. This is the important part about options trading. For the trades we do here, you will buy to open and sell to close. If we're doing covered calls or something, that's when we would sell to open and buy to close. But we don't want, for the most part, to be the originator of the contracts. So we are only going to buy to open and sell to close. If you have a hard time remembering that, write it down somewhere, tape it to your desk, tattoo it on your backs of your hands so you can read it while you're typing, whatever you need to do. So anyway, with this current bid at 118 and the ask at 121, if I was wanting to buy this, I want to make sure I'm getting filled. If I did a market order, I'm giving my broker the permission to fill me at any price. If I do a limit order, even if it's above the bid or the ask price, I'm telling them they can't fill me any higher than the price I put in here, that $1.25. Now, let's say I wanted to enter a trailing stop on this. If you're using E-Trade, they only let you use trailing stop dollar. It's the dollar amount I would want. And let's say, I say, oh, I want to do a, let's say I bought it at 120 and I'm doing a 50-50 trade. I wouldn't have bought 5 contracts. Let's say I bought 10. But if I was doing a 50-50 trade and I bought it at $1.20, what would my trailing stop be at? 60 cents. What do I want to do with this where it says term? Good till canceled. And then when I want to enter the order, which button down here am I going to hit? Buy to open, sell to close, sell open, or buy close? No, we're selling something we had already bought. We're going to sell to close. Okay, so just with like the basic order form, does everybody understand, just how to verify that, for the option that it's the correct option you're wanting to trade? And the difference in a limit, a market, stop limit on quote, stop on quote, trailing stop. The next thing I'm going to talk about tonight is a conditional order. And because a lot of you have never used conditional orders, I know it's going to take a little bit longer. So we're going to talk about it in a different way. We're not just going to go straight into it. If you're using E-Trade and you just open the order entry form, you would click here, like when you open it up, you click conditional and contingent. Okay, those you use in E-Trade, that's what you'll do, conditional, contingent. Those you using TD Ameritrade. If I was wanting to buy the Citigroup March $50 calls, I pulled it up like this, I would set up my buy order, how many contracts I wanted. Can everybody see right over here where you've got single, buy, the number of contracts, the ticker, the date, the strike, call or put, price, limit, GTC, and then where it says best? Everybody see that? Just to the right of that, there's a little wheel. Everybody see the little wheel? Those of you that are using Thinkorswim, do you see the little wheel? If you click that, this pops up. This is your conditional order for Thinkorswim. And we'll talk about how to fill it out and everything in a minute. Oops, wrong button. Well, right button, wrong tab. So I'm going to come over here and I'm going to look at a chart just like you might do. And this is where I would use conditional orders, by the way. The group we have that does the after hours trading, we do a lot of conditional orders. So that's because they're not able to watch the market during the day. So they've got to depend on, if my stock does this, buy this. Almost like a broker alert, except for a broker alert that actually has an action on it. Okay? So let's look at a couple things with this stock, Citigroup. Anybody see anything in particular on it? As far as we could start to build a trade plan? We're going to do some charting too. Yeah, I was talking about this one after hours. You'll find this really in the entire financial sector right now. Nearly every one of the financial stocks that did not do well on earnings is sitting at these gap points right here. If we looked at GS, here's your earnings gap. You're right there. We went to JP Morgan. Here's your earnings gap. You're right there. Something consistent with this sector of stocks right now. So if you remember back our lesson a couple weeks ago, we talked about how you could use a stock's quarterly earnings to plan swing trades over the next quarter. So if I know the stock did poorly on earnings and it's now made an up move, might I want to look at it and say, there might be a puts play for me to make? What do you think? Well, one thing that I've found with using like conditional orders is I rely on them for a certain style of trading that I do. And it's with my swing trading where I actually scale into the trades. I usually buy in increments of 1/3 and I sell in increments of half of a position. So, let's say your total position size is $1,000. We'll say $900. You would do 3 even buys at $300 each buy. But when you sold, it would be half of however many contracts you have. Now, if I'm only going to buy in thirds, how much money would I be putting at risk on my first buy in relation to a total position size? $33 and a third percent, right? 33 and a third percent. That might sound like a lot, but in the world of options, 33 and a third percent is nothing. So really, that first buy sometimes can kind of come on a whim. Hey, I think this stock will go down. Let me buy it. And if I'm right, I'll make my second buy and hopefully my third buy, and then I'll make money on the trade. As crazy as that sounds, people relate to it fairly well because on stocks that you're right on, you're looking to have 3 different buys on it. Stocks that you're wrong on, well, you got 1 buy on it, you're wrong. That could be a loser. But let's say I was looking at this as a puts play based on filling this earnings gap. If I were somebody that couldn't sit and watch the markets all day, or maybe, I'm trying to watch more stocks than I can legitimately watch. So I need a little help watching the stocks. The other thing I like to do with this is I kind of set me a backup order. What I mean by the backup order is as I prepare my trade plan, if I'm looking at it as a potential puts trade, I'll actually find a point where I might have to buy calls. what point do you see that if it crossed above, I might want to buy calls, even though I might be viewing it as a puts trade? Exactly, that gap fill line right there. And the closing price there is $50.02. Well, let's say I'm looking at this for a swing on March options, and because their earnings, their actual EPS, they were right on. They were expected to get 6 cents. They got 6 cents. The only problem is that's horrible for a $50 stock to get 6 cents EPS. But they also guided down for the upcoming quarter. So fundamentally, it would make you think that they're going to trend downwards, even though no stock goes straight up or straight down. So on any up move, you would be looking for a trade to the downside. Your little protective area would be if it crosses above that 50.02, we might need to take some calls. So let's keep that in mind for a second. Now, if I thought this was going to go down, what would be some other reasons I would think it could go down? One way I would see it that others might not is I would say it's so far made a lower high after a lower low. And you'd say, well, how'd it make a lower high? This is higher. Well, only look at closing prices of candles. This close here is lower than this one. This close here is higher than any close here. And you'd say, well, that's not what it looks like to me. Well, think about most of the charts you see when you watch somebody talk about them on television. They probably usually look like this, don't they? Or they just look like this. And as of right now, it hasn't made a higher high. So when you're talking about building your trade plan, there's a couple really easy areas to look at where you could get your fills at and how we could use conditional orders to help get those fills. So looking at this particular pattern, where would be a target area I'd look at for a swing if I believed it was going to trend downwards? What do you think would be a good target area? Yeah, I mean, you could use a plethora of different trading sets. You could use some Fibonacci extensions. You could just say, hey, well, this is the low it came from. And if I think it's going to trend downwards, that means I'd expect a lower low. But right here, this $47, $46.95, that's a good guide point for helping me pick what? My strike. And you could say, yeah, but you could get like $35 puts a lot cheaper than $47 puts. But you'd probably make a lot better trade on the $47 puts than you would the $35 puts. So let's go over here to an options chain and let's look at those March $47 puts. They're sitting 62 by 64 right now, and that delta's at 0.26. We're going to apply a little bit of what we learned last night as well, but we're going to come over to our chart and let's look at right now what could trigger our first buy. And if we're scaling into a trade, we know our first buy is the most dangerous one. It's the one we got to have some wiggle room with. as far as the close of each day, I would have still a lower high and lower low so long as what happened? We stayed below the daily closing price of 49.57, right? Does that make sense? Even though you gapped up today, you still didn't make a higher close. So, and I'm going to detach this now so that I can go back to the chart. And we'll just kind of pull this up here a little bit. Okay, so if I was looking at the $47 put to enter a conditional order because I believed it was going to go down. And, let's say I'm sitting right now, 8 o'clock at night, studying charts. Can I buy options at 8 o'clock at night? Heck, I can't even buy common stock at 8 o'clock at night. But that first buy, my riskiest buy, heck, as long as I get a daily close below 49.57, I'm pretty good. Now, this won't let me pick specifically for a daily close, but what it will let me do is say, you know what, if it gaps up, it at least has to come back below 49.57. So let's say my position size was $900 for a total position size. One thing you'll find that with the average theta, if you're not expecting much of a move to get your buy, then you can pretty much put it in at the last price and get it most of the time, or at least the ask price. But if I was going to do $300 and the ask for that contract is 64, how many of these could I even plan to buy? 4 of them. You might say, well, 4.68, round that up to 5. And I would say no, because then you are exceeding your position size. So I'm going to put this order, I'm just going to set this up, my order form, like this. And then I'm going to come over, I'm going to click that little wheel so I get my conditional order. Just take a second to verify. It says I want to buy 4. There's the put right there. Buy, quantity 4, limit 64 cents, good till canceled. And what do I want to see for this to happen? Well, I type in my symbol, C, use your mark, and I would want it at or below what? That 49.57, right? At or below 49.57. Is everybody with me still? Now, Sam, if you listen to everything I said instead of just 1 or 2 words, you'd be okay. If you're using E-Trade, you'd pull this up, you'd click conditional, and because when you first pull it up, it's going to look like this. Click conditional and contingent, stock, Citigroup. We already know our at or below price, 49.57, so it would be less than or equal to 49.57. Where it says security type, change that to option. Ticker C. We're looking at puts for March 20th. Strike 47. Said we were going to buy to open 4 of them. Limit price of 64. and good till cancel. Now, let me tell you what this will do. At tomorrow's open, if Citigroup gaps up to $50, is my order going to be placed? Nope. What would it have to do for my order to even activate? Yeah, go below 49.57. So basically, I've either got to open up at or below 49.57, or if it opens above that, fall below it for this order to even take place. I'm going to go ahead and I'm going to put this one in. Now, I did it with my E-Trade account. Now we're going to go and look at this other aspect of it. What if it goes the wrong way? What if I wanted it to go down and it goes up and I'm at work and I can't watch it? Well, that's where I'll use an order for like a 1/3 buy to protect myself. We already said that if it went above that gap fill point, it could probably keep going up, right? Same conversation we had today for an hour after the market closed with every financial stock. It's kind of right at that make or break point. It either pulls back from those earnings gaps, or guess what? We're going up. So what could I do here? First, I'd have to figure out what it could go up to, right? Well, if we use the last low to pick a strike, why don't we use the last high above here to pick a strike? That's 51.94, and I would say for something like this, you could actually just kind of round that to 52. You could go with the 51 if you wanted. Let's take a look at the option chain. Well, guess what? It only gives me a 50 and a 52.50. So what am I going to do now? If my choices are only 50 and 52.50, well, you could probably get away with that. But to be honest with you, if that last high point was only 51.94, okay, the 52 is really close to that. 52.50 is not so close, is it? Meaning on expiration day, if it's sitting at that target area, 51.94, there's not even a chance I'm going to get any money on expiration day, is there? So we would look at the 51. Now, this thing would have to go up, quite literally. Get your calculator out. 50.02 minus current price 49.39, 63 cents. What value that we talked about in last week's lesson that we can find on our options chain will help us determine a price change based on the movement of a stock. Especially that first dollar move, the delta. So my delta is 0.45. The difference between where I would maybe consider buying calls and where it is right now is 63 cents. Now, I'm not even going to factor in theta, because if it goes above that, I want to make sure I get filled. So if I just use the current value and ignore the theta, my limit order will still make sure I get filled. So I'll multiply that by 0.45, gives me 28 cents. And I'm going to add that to the ask. There we go, 149. Now, every day that goes by, obviously, it's going to shave 2 cents off of it, or at least, 2% of the premium is really what it is. But for 149, 150, I could plan on getting that order. If my position size is 900 and 1/3 of that is 300, how many of these can I even buy? Two. So I'll come here on my chart and I'll change this to a 2. I just got a question by private message, and I'm actually going to break my rules and answer it. Well, how do you know you're going to have the money available to do it? If your trade plan says that you are scaling into a trade, then when you make the first buy, you have the cash also available to make the other 2 buys. Otherwise, you've already failed your trade plan. So if I bought 2 and 149, I'm just going to put that at 150. Good till cancel. I'm going to click this little wheel. And I'm going to come over here, and with Thinkorswim, I'd type in the ticker, Citigroup, method, mark. I would do at or above 5202. If I'm using E-Trade, I would bring my order like this, stock, Citigroup. I would go greater than or equal to 5202. Option Citi, well, you know what? This is going to be a call for the $50 call. We know we'd be buying 2 with a limit of 1.50, good till canceled. So now if Citigroup breaks 5202 or goes 5202 or above, sometimes if you want, you could just move that to 5203, meaning it has to go above it, not just touch it. Then I would buy 2 contracts with a limit order of 150. And I'm going to submit that one. How many buys am I planning for with this type of trade plan? 3. So where would my third buy come from? I think it's going to be a puts play. I'm not necessarily going to leave my call order in there forever, but I'm at least going to leave it in there the first couple days just in case. Where would my other puts buy come? What do you think? Well, what do you think I'm really going to need at this point for confirmation of direction? Yesterday's evening star didn't do good. Yes, Tim, it would hit 5202. Well, mine was 5203. I put it in 1 penny above. So if it breaks 5202, my order will then trigger. Until then, my order won't exist. How about if we get a lower close right here, or at least dip below that? Don't you think that'd be a pretty decent point where we could average up in the puts? And that price is 48.40. So let's look at something real quick. Current price is 49.39. Where I do that next buy is at 48.40. It's 99 cents. Let's take that off there. Let's pull up our options chain. We got to go back over to the 47 puts with a 25-cent delta. And if we did 99 cents, the difference from where our order would activate and where we are right now, times 0.25, give us almost 25 cents. Add that to the 0.64 ask. We got 89 cents, we'll say. Well, if my position sizes are $300, or if my position size is 900, and my scale in is 300 per, how many contracts could I buy for $89 or 89 cents, which translates to $89? 3. So here we go, 3, 89 cents, and I'll just round it up to 90 to make it easy. Good till cancel. Click your little wheel here. If Citigroup goes, and with TD Ameritrade, you can actually do below or above instead of at or above and at or below. So we'll say if it goes below 48.40, we would like to buy 3 of those puts with a limit order at 90 cents. Okay, so if I pulled this up, if Citigroup, see with E-Trade, I only get greater than or equal to or less than or equal to. So I always like, for this case, I'll go a penny under 48.39. So I don't want it to hit right off of it and then jump. So I'd be looking at a put, the March 20th, 47. My quantity would be 3 with a limit price of 90. Good till canceled. And I'm going to submit it. Now, let's say we go to work tomorrow. We come home and Citigroup's sitting down at 47.80. How many buys should have hit? Two would have at least triggered. That's absolutely right. We would have at least triggered on 2 of them. If we didn't fill on them both, we would actually have open orders, wouldn't we? Now, one thing I always like to do when I scale into a trade like this is once I get my second buy, no matter what else happens, I want to sell half of it at 100%. Even while I'm still looking for my third buy. So let's just assume I got, what was it, 5 contracts? Let me go over my order status here. 4 contracts at 64 cents. Okay, we'll just assume I got 4 at 64. Oops. So 256 bucks. And then I got 3 at 90. So I'll add those together. Divide that by what? 7 total number of contracts. My average would be 75. And I would probably put my order in if it's an odd number like that. I'd put it in for 4 contracts at the 100%, but I'd put it in at 150. A good till canceled limit sell. So I get home from work tomorrow. Oh crap, I filled on both of those. Now I've got 7 contracts. My average is 75 cents. Well, I want to put in an order for 4 of those 7 at $1.50. if I sell half of a position at 100% gain, what does that take out for me? What will I no longer have for that position? Risk, right? If I sell half at 100%, that means I got my money back. I can't lose money. The worst thing that could happen is I don't make any money on the trade. But did you know that I could also set my order to maybe sell it at a target using a contingent order or a conditional order? I would have to wait until I get filled before I could enter the sell order. But let's say tomorrow I get home from work and wow, I filled. This thing looks like it's going to hit my target. Well, what I could do, pull up my options chain. And let's say I already have the order in for 100% on 4 of them. So the remaining 3, I could do just like hey, just market order sell it if it hits my target. That's one thing I could do. I could come over here and, I want a market order. If Citigroup goes at or below, and this down here is 47.90 or 46.93. So I would go just a little bit above it at, $47. And this would actually sell my contracts right at my target if I wanted to. The other cool thing I could do here, and I could do this on TD Ameritrade, E-Trade will not let you do this next part, is I could say, you know what? I want you to put a 10-cent trailing stop, good till canceled, when Citigroup goes at or below 47. So what would that order do? If my target of 47 was hit, it wouldn't just sell it because, hey, what if you come back and, man, you sold it right at 47, but you come home and it's at 44? If you wanted to play it really tight, like, give it a chance to see if it just falls straight down from that target area, you do a tight trailing stop like 10 cents. If you want to give it some wiggle room to be able to bounce around a little bit and still go, you could actually set it for like 25 cents on one that would be this price. So you'd be looking at about $1.30, $1.40 down here if it did it in a week. But now, do you even have to sit and watch the chart? What do you think? Do you even need to sit and watch that chart? No. So then the thing comes of, well, what if I want to set my order to sell at my target or to stop out at a certain price? I don't know many brokers that'll give you that exact luxury. So if you're more concerned with the stop out, set it for wherever your stop would be and set a broker alert for where your target is. Or do what I would usually do is like a half and half. Almost kind of like the 50-50 trading system, but instead of having a trailing stop and a limit sell, I would have the contingent orders or the conditional orders at my target for half my contracts and at my stop for the other half. Now, the other time that this could be a pretty cool and handy thing, believe it or not, is for day trading. how could this be a good thing for day trading? Let me give you 2 examples. Have you ever entered a day trade? Something you're looking to buy calls. It comes down, it bounces off your support point. You buy the calls, but then for like another hour and a half, it keeps bouncing on that support point. During that time, it might lose some money in premium from the time decay. And if you're using like the 50-50 system, maybe even sometimes it stops you out on your trail stop, but then still takes off. And you're like, well, shoot, if you're using the 50-50 system, I got stopped out and I only made 50% on my limit. Kind of hosed me. You ever been in that boat before? You could actually set it to a price point. Here, we'll go to a popular one, Apple. And let's go to the 15-minute chart. Let's say, for example, I'm going to zoom this in a little bit. That at the open today, you had a couple swing high points right here. You saw it break it and you said, man, I want to take a chance on that. But I know it could come down and fill the gap and still go up. So, I'm pretty sure it's going to go up. So that's kind of what I want to do. If you set a 50-50 on that first thing in the morning, shoot, just how things go in the first 5-minute candle, if you bought during that right at the open, you could actually hit your 50% loss while the candle's going up in your earn calls, because while implied volatilities are settling down, they get a little funky. But rather than doing like a 50-50 where you would set your 50% trail stop, you could say something along the lines of, okay, I got into this trade. You know what? Now it's looking pretty good. Now it's looking pretty good. It might pull back a little bit. Crap, I got to go to the bathroom. And I bought $122 calls. Let me take these lines out. Because I got to go to the bathroom, I'm kind of scared to leave my calls sitting here, but I don't want to sell them, and I don't want to wet myself either. Well, if I was trading Apple and I use this low price from this candle, 120.16, less than or equal to 120, and I said it could go to 120.16, so I'd do 120.15. And let's say I was trading this week's 121 calls or 122 calls. So February 13th, 122 calls. We do to sell to close. Let's just say I had 10 of them. We could just say, hey, if it drops below that, get me out of it. And I could set this while I go to the bathroom. Which can be a pretty helpful thing. Here's the other thing. Have you ever been watching a chart during the day and you're like, okay, this little booger, I kind of missed it. You know what? I want to see if it retests, if it does get down there, but if it breaks that line, I want to buy it. But it always seems that when it actually breaks that line, where are you at? Not looking at that chart. You ever had that happen before? I have it happen all the time. Well, I could always come and say, okay, well, that here is at 121.06. So if Apple, I want it to break it, so 121.07 greater than or equal to buy to open the 122 calls and market. You can get away with it on Apple because the spreads are like 1 or 2 pennies. So just do it at market. So now all of a sudden, you were looking at Apple, you got tired of waiting for it. So now all of a sudden you're looking at other charts. Oh, guess what? What's going to happen there with your conditional order? Yeah, you're going to get your fill. But see, sometimes, and actually you could probably say for some of you most of the time, when you're sitting back on this chart and you're looking at it like this, you're like, okay, I'd like to see if it comes back here, makes a positive move up. But if it breaks above this and I think it'll go up, I have to buy it, right? Well, almost inevitably, you'll look at a lot of charts and say, okay, if it breaks this point, I need to buy it. But see, you won't come back and actually see it till it's right here. Does that ever happen? And that kind of sucks, doesn't it? Let's just face it. Well, the cool thing is you can even set like your brokerage account up to text you when it fills you on an order. So even if you are in the bathroom, it might sound weird, but a lot of people take their phone to the bathroom. They like to play Clash of Clans when they're going to the bathroom. So you're sitting there on the commode, and all of a sudden, zzz, zzz. Oh wow, hey, I guess Apple crossed that point. So let's say you're using some sort of other targeting system. Maybe you this morning had some Fibonacci extensions on it. And you're like, well, shoot, it just broke straight through there, but it retested as a support. It's kind of consistent with how Apple can be sometimes on a breakout move. Where could this go up to? Okay, 122.58. Might go up there. Okay, let's see for a second. You're bebopping, you're bebopping. You're sitting here watching it during this time. Wife just called. The kid's sick. Somebody's got to go pick up the kid. And you're just sitting on your butt at your computer, right? Isn't that what the wife always says when you're trading? Why can't you do it? You're just sitting on your butt. You're not doing anything. You're just on the computer. Maybe that's just my wife. Well, let's kind of look at something here real quick. Even though you haven't hit your target, is there a point where, you know what, if it gives up something on this chart, that the trade might be over? If we're in a bullish trade, we want the stock to make what in relation to lows and highs? Higher highs and higher lows. So, I could put a little line right here. Because if it dropped below that, basically it's going to make a lower low, right? And that could at least protect part of my gains. So if that value was there, 121.54, we could come up here, and if Apple was less than or equal to, and sometimes for a day trade, if I'm doing conditional order, I actually use the absolute low price. So we got a 121.47, 121.47. So that if it's lower than 121.47, which would be 121.46, there's no doubt then it's made a lower low. And we want to sell to close those contracts. So even though I know I got this conditional order in, I'm driving 100 mile an hour in a 10 mile an hour school zone so I can get them little rugrats and get them home. In this particular case, if you were just day trading the current week expiration, you'd have probably said, okay, it's end of the day. I don't want the risk of time decay or maybe a gap down, so I'm going to sell it. The cool thing you can do with Thinkorswim, though, that you can't do with E-Trade. I'm going to pull up that option chain. And we are going to say we were going with these with the 122 call. It was 121.46 that we would sell. And we could just put that like at market. That could be condition 1. Or condition 2. At 345, just sell it in case I'm not home. Let's say that even though you plan to maybe sell it by the end of the day no matter what, but there would be a certain point that maybe you would be willing to keep it. What do you think would be a certain point you would have been willing to keep 122 calls for the overnight if you're just doing like the standard day trade? I wouldn't just say in the money because it can, if it closed right at 122 and you gap down to 121, that could still happen. But I mean, you can be a little crazy with it. The only way I don't want to do that is if Apple is at or above 125. So you know what? If I go pick up the little rugrat that's sick and I can't make it home by market close, if Apple breaks 125, it's not going to sell my contracts just right at the close. But you can actually enter up to 3 conditions with Thinkorswim to make your buy or sell or to cancel the buy or sell. Let me show you another place this could have been pretty good and pretty helpful. Up until today, we've been talking about this triple top, right? And even though Friday got above it, it closed below it. And man, yesterday we pulled back from it, didn't we? On the SPY. Well, you know, let's say I was putting in a bunch of orders for puts trades, like a swing trade for puts, like the Citigroup order. Now, if the SPY breaks out chances are a lot of stocks I follow are going to probably not go down, right? They might not go up, but they probably won't go down if the indice breaks out to the top side, right? Well, we could actually put in on that order form, one of your conditionals, let's say it was a put order, even though it's not, this one just has Apple, I could put in SPY. If SPY is at or above 206.10, which was that support level we talked about, or the resistance level, then cancel my put orders because chances are it's going to go up. Here, Cash, when you're just looking at your normal order form, you see that here where it has like the line across it? If you go all the way over on right beside the one that says TIF exchange where it says best, there's like a green wheel with a plus sign. Do you see that, Cash? You click it and this pops up. So you want to fill out your order form first, but before you hit confirm and send, this is simple. If I'm on my option chain, I can click the ask, pops it up. I could even do it from a chart. Let's say I was doing period GS 150220 P175. I could click the bid, it pops up the same thing. So let's say, like for tomorrow, hey, if GS goes above that gap fill, the earnings gap, I want to exit my puts. So I got two of these. Oops, going the wrong way. It's 184.93. So I got two of them. I click this, and you know what? If that frickin' stock goes up anymore, I need to sell those. But the stock's already run up 12 bucks, so I just want to sell them, and then I'll see whatever money I got left, and I will look for another trade to buy. And then I could submit it. Let's see. What would make me cancel this order? Well, GS doesn't trade very heavily in the pre-market. But I'll tell you what, if the SPY was gapping down to, let's say, 204 bucks, then I'd probably be willing to take my chance to see if GS fell immediately at the open. Wouldn't you? If the SPY was going to gap down $3. So you could have your order in and then say, well, you know what? If this SPY drops, I want to take my chances. And then you could just hit OK and submit it. Where could this be handy for the focus group? At the targets would be one spot, Tim. Else. Well, I mean, they're a very good thing for anybody that works during market hours. What about when you get this thing? Because guess what? There's a chance I might not be looking at GS right when it makes the first bit of a move. And then it's like, oh, shoot. But you know what? Your conditional order could catch it. And the cool thing is, too, as far as the little cancel section of that conditional order, what do you think you'd put in the cancels for that? Well, you know, if I put like a fib extension and we had a zero line, but tomorrow it gapped down below the zero line, well, that call order you had in there, you might want to have a cancel as part of your conditional order that says if it goes below that zero line, just cancel the order. And the reason would be is because if it dropped below the zero line, then there'd be a new target to the upside even if it went up. So now on Sunday night, you get your spreadsheet, you could do that, couldn't you? And then if you filled, once you filled, what type of conditional order, if it hits my target, sell it. Does that make sense? So it could actually be made into quite an easy process, which, you know, when I reviewed some of the emails I got and stuff, one thing I saw from the people that I didn't have to email back and say, whoever told you to double your position size? We didn't double the position size. Oh, well, you know, and then here's the answer I got. Well, after we doubled it at first, I figured I'd go bigger so I could make more money. Well, that wasn't part of the plan. A lot of people did that. But the ones that truly legitimately needed some help was like, man, why did you buy that at 164 when I said don't pay more than 125 for it? Well, because I got your alert and I wasn't able to look at it for like 4 hours afterwards. And I could see it by the timestamp on what they sent me. But with something like this, you could do this at the wee hours of the night, couldn't you? So just some real simple just some, you know, simple little tips. And, you know, I'll be honest with you. I had some people the other night in our after hours trading small group that said, you know, how come you didn't teach about these before? And it's like, well, because, you know, I don't typically use a lot of them except for stuff I know I won't be watching in the chat room. So I never really thought it was a big deal. And I actually had a guy say, dude, this is a big deal. I work full time. I need something like that. So I can actually build my trade plan and not be right on everything, but miss it. And then when I'm wrong, I get all those. And I said, you're right. So we're going to do the webinar on order forms because I needed to touch on that for some newer people. But add in the conditional orders to that. Conditional orders are a good thing that'll basically allow you to execute based on your trade plan.